All right, what's going on, everybody? Sorry for those technical issues a little bit ago. We're going to talk about Haim Bodek. Has recently been in the news about the BATS settlement here, possible settlement over giving unfair advantages to high-speed traders. And for anybody who's followed us on Twitter, you guys know that we've been actively posting the whistleblowing from Haim about these unfair advantages as far as order types and things like that. So we're going to just kind of shoot the shit about it here today. And Bryan, you've worked with him in the past, and you've been with him sort of lock and step thus far here. Obviously it's been quite a turn since the hedge fund that you guys were working on that collapsed, and now he's kind of back on top here. No?
Yeah, I mean it's pretty much vindication of, it's vindication. The company still fell apart. I was a partner in this company. I did the first and last trade, and it was because of this order type that is now, BATS is saying, and it's really Direct Edge, but Direct Edge was bought out by BATS, or they merged. I mean, they're saying, yeah, well, we'll settle with the SEC because really there was an advantage given to HFT traders, market makers of that type. So yeah, it's vindication that we went down in flames because of this priority given to them. So it's
yeah. Now, do you know the specifics here on this settlement? I mean, have they thrown out numbers? Have they ironed out specifically what those unfair advantages were to HFT? Have they discussed any of that?
Yeah, well, I mean, the settlement obviously is not done. That's going to probably take a little while. But essentially, it revolves around hide not slide rules. To get into the technicalities of that, it's too complicated. But essentially, it's giving time and price priority given certain participants at the MBBO, the bid and ask. So it just revolves around that. And they didn't even try to fight it. They were just like, yeah, we're wrong.
Right.
And we're settling.
I saw that, but they did in the beginning. You remember the big hoopla over that when Katsuyama came out on CNBC and was fighting with
Bill O'Brien.
What was the guy? O'Brien, right? The Direct Edge CEO.
Who stepped down last week?
Did they force him to step down? Is that what happened, or did he just back off?
I mean, this is probably what happened. SEC was like, we're gonna have to settle. You're gonna have to settle with us. We're gonna do a full investigation of all. But whatever we're gonna do it. It's probably best that Bill O'Brien steps down. But at the same time, after the fool that he made out of himself,
right,
on that debate, that was automatically in the works. Like him just saying, just accusing Katsuyama or whatever of scaring people was like one of the dumbest quotes you could possibly say. It's like, what did he say? Like, how dare you, or whatever. It was just so stupid. He was like a fifth grade teacher.
It was comedy. It was comedy. What do you think about consolidation? What do you think about the industry in general after all this after the whistleblowing from Haim and a lot of other folks are coming out and they're really starting to do something about it? I mean, I know what was it? Knight merged with GetGo, and then they spun off Direct Edge, right? And now we have this issue here with BATS. Is it all going to filter up through the source to hurt guys like GetGo, to hurt Knight, to hurt to hurt or impede their world, their never take any losses world? That places like Virtu and all these high frequency trading shops are able to crank out. Is it are we headed there, or is this like a little slap on the wrist? BATS is going to go ahead and pay a couple mil, and we ain't going to talk about this shit anymore. Is that what's going to happen? What do you think?
I hope that it goes straight up their assholes because, they not only they screw a guy like me, but they screw millions of other investors. Maybe just a little bit, but it's like it's like Office Space. It was still illegal what they did, skimming off the top. I mean, there's no reason just because you're a big exchange, or you're a big market maker or what have you. It doesn't mean that you can get away with it. I think we should just go back to, teenies. I think we should go back to wider markets with thicker bids and asks.
Right.
I think options should go back to nickels, and everyone would be happy. There'd be thick bids and offers. It'd be much better for a guy like me that wants to be a market
It would
maker.
be, yeah, see, it would be better for a guy like you, but any rule or any change in market structure is going to affect some, you know what I mean? It's going to affect some people negatively while,
Right.
patting
No,
the.
I know, and like customers will have to pay more and cross spreads. No, I'm not saying that, but it's interesting that pilot for making 5-cent increments in some smaller names, which just came out last month, is
Right.
interesting. It's an auspicious move, I would say.
Right.
A pilot by the SEC to revert bid and ask spread is quite interesting, I would say. You
All
know,
right. All right.
I don't even know what stocks these are dealing with. I think it might be like Russell 2000 stocks,
Mm.
that are going nickel increments, but they're just trying to have consistent, thicker bids and offers as opposed to, and a market maker might tend to stay there and not, just pull out like an HFT guy is because, if he gets hit in the offer and he gets hit on the bid, well, that's 5 or 10 cents as opposed to a half a penny.
Right.
So,
Right.
it offers opportunity.
So one thing I want to throw out there to everybody watching too is that we're not saying, as well as Haim. Haim is also not saying that all HFT is bad HFT. I mean, we're not out here saying that at all. So we're definitely not anti HFT group over here at Sang Lucci.
Right.
But we are in a place where those practices are definitely being looked at. And a couple of these things are definitely predatory. They're definitely predatory, and that's what Haim is out there really, really cranking it out. So, question to you, Bryan, is where do you think Haim's role here in all this thing is going to grow into? You know what I mean? Like, where do you think he's obviously it's starting to blossom here. All this work that he's been doing for the past couple of years, just sending all these complaints out there. Where do you think his role, blossoms into? What do you?
Right. I mean, essentially, the basic argument here are predatory order types, like we're talking about. So, his role is to clean up those dirty order types, the ones that say, "Oh, because I elected to go to, limit order Z, which no one knows about, I can step in front of you."
Right.
You know what I'm saying? Like, getting rid of those. Doesn't matter if you're fat. Fine. If you're fast, everyone's trying to be faster. That's not illegal. The illegal part is cutting in front. Why can I cut in front? Because I have this obscure order type.
Right.
And we need to get rid of those, and that's what he's working on, and I commend him, That's why I stuck with him since 2011, because I saw his virtue.
Yeah. And that's a lot of time. That's a lot of time to put into, to put in all that effort and time to get nothing back for, you're talking about years. Now, let's talk real quick about that whole whistleblowing fee thing. I mean, what is it now? What is it up to now? Isn't it like 30-40% of a particular settlement? Is that
yes, it's something like that. It's something like that. And the question is, what could the settlement be? I don't know. But I also couldn't imagine it being $1 million fine because it seems like a really, and considering the SEC is, with Mary Jo White, I mean, they have to represent themselves as like a better authoritative agency. They can't just be like, okay, here's $1 million fine. That's nothing for someone like Bats or Direct Edge.
But not for nothing. I mean, I don't know if you've been seeing some of the other settlements coming out because of this, but they're pretty minuscule, man. I mean, they're pretty minuscule. Plus, you consider the fact that Bats was the one that rolled out these order types to give the advantage to HFT. You're going to hit Bats, but what about the nominal effect on all these people's bottom lines who were able to use those order types, right? I know,
yeah. I mean, but
we're talking about a guaranteed, hundreds of thousands of dollars every single day that was made in profits because of these order types. How do you even enforce that, right? I mean, what are you going to take this money and then do what with it? Give it back to who, or where's it going to go? So I don't know.
It's like, if there is an order type and it was approved by the SEC, SEC can't say market maker A should be liable for something that was approved by them.
Right.
But I think what it comes down to is that the SEC is saying, oh, well, you manipulated you withheld some information in your filing, and it goes back to the exchange. And an exchange is a multi-million-dollar business. It's not a business where they're making $10 million a year.
Right.
You know, they're making hundreds of millions of dollars a year, and over the course of 3 years, or before that, because trading machines started crumbling in '09. That's when that guy, I forget who it was, slipped Haim at like a cocktail hour.
Yeah, the information.
The blueprint about this is the order type you need.
Right.
And even then, when Haim knew about it, he was too ethical to actually use it because he didn't think it was fair.
Right, and now we're talking about 5 years after that. Now something is actually happening. All right, so let's.
So who knows?
Yeah, let's wrap this up with a little theory here. How will the market? How do you feel like the market action could change as a result here? I mean, is it going to be is it going to be that much of an impact here on, let's say, trading activity per day, or how do you think we're going to be impacted by, let's say, a big shift in, just the inability to use these order types? Honestly, I'm thinking about it. I'm like, it's not really going to be impacted that much at all, right? I mean, they just got to find a different game.
Yeah, there's always going to be a new game. The thing about it, maybe. I mean, in the Bank of America, there's always going to be interest at the NBBO and in between.
Right.
But maybe a name like, Netflix or a High Flyer, it might widen out a little bit because they don't have that, protection.
Right.
But when you're talking about a BAC, I think there's just too much. You have to find the next game because there's too much volume for a market maker to say, well, I'm going to widen out, because there's always someone that wants to be at the top of the book.
Right. Do you think strict regulations are going to come out over the dark pools? I mean, is that also on?
That might be the next thing. Might be the next thing.
We know. Who was it? Was it Citadel? Who was it that the dark pool got shut down? Which one was it?
Is it Goldman? Are we talking about Goldman, or I think
Goldman?
Was it Sigma X thing?
It was a Barclays dark pool.
Okay.
Remember that? So they had about 8 million shares hitting their dark pool every single day, and basically they just lost most of their volume because of what happened in the news and everything, and how they were affecting their customers' orders, through that particular dark pool. So do you think now we'll get a more lit market? I mean, is that a possibility?
There's always that possibility. There's always banks that want to keep internalizing. They want to take the fees on both sides. So, I think there might be just maybe more regulation, because they're not really heavily regulated, more information about the types. But, there's always a new dark pool. There's always, guys like us or smarter traders that find a way to use a dark pool, and then dark pool, stops having business because one side of the trade doesn't like getting hit all the time. There's always some, there's always something.
Right.
So I mean, it's just more about transparency, I think, in the dark pools. There has to be. You can't just have dark trading that is like 30-40% of the market without, that's the next step, I would assume.
Well, I mean, not for nothing. I mean, for everybody out here watching, I mean, if the market becomes a more lit market, I mean, therefore it might be a little bit more fair as far as, access to liquidity that, let's say, you wouldn't have been able to see before. So that could be some positives here. But again, this is probably going to take some time, and as usual for you traders out there, continue to hit them and continue to watch, how the market works. Continue to watch some of the news that is coming out there. Obviously, if you want to read up on anything about Haim and what's going on with this bad settlement, check sanglucci.com. Thanks a lot, Bryan, for hanging out. We'll be back on Tuesday, guys, for another episode.
Cool.
Take care.
See, that was